to also record it on the computer. I've already fixed the chat, so that's the good news. Let me just go ahead and record right here. And it's
Perfect.
the top of the hour. So good evening, everybody. Welcome to another Global Expansion Team Zoom. We have Paul Hoffman, who's a CPA living on the East Coast. He's been doing taxes for a long time, and he's going to guide us tonight on what the tax benefits of having a home-based business, when to maybe claim your business as an LLC, what's the difference between an LLC and an S Corp, all those kinds of questions that, you know, you may or may not know about. So Paul, thanks so much for joining us tonight.
Pleasure. Thanks so much for inviting me. Yeah, I keep looking at this picture and it's hard to believe it's 46 years that I'm doing this. And
Wow.
I'll be approaching 70 shortly. And it's like, oh my, just unrealistic. But maybe we can have a little kudos to ASEA. Maybe that's giving me a little bit of better perspective. Those are right there is enough topics: LLC, S Corp, home-based business. If you said this is a 2-hour event, we can probably we can hit the tips of each one of those. But if I can do one thing, if I give me the latitude, we continually talk about a business, and it's very true. We're asking about the benefits of the business, but I think there's two aspects of the business that we skip over very, very quickly. One is a mindset of a business person. What is a business? People go, well, I'm in business. Well, some of what I'm going to do this evening is I'm going to read a little bit out of the IRS, so I make sure I keep it short and distinct. But so the IRS says that a trade or business is generally an activity carried on for a livelihood or in good faith to make a profit. The facts and circumstances of each case determine whether an activity is a trade or business. Some of the important facts and circumstances used to make this determination include, and we've heard these before in our own business: regularity of activities, regularity of transactions, the production of income, and ongoing efforts to further the interests of your business. The next part I think is pretty cool. We forget about this. You do not need to make a profit to be an operating trade or business, but you do need to have a profit motive. So, just the mere fact that we say we're in business, it doesn't mean we are. What I've used the phrase for years is what's called the business of doing business. We think that prospecting, we're in business. We think selling a widget, we're in business. And the fact of the matter is, when Cindy's asking about the entity structure, that's because we're looking at a business activity and looking at it on a much more broader scale. We're looking at it, what does it take to operate a business? And again, the sales aspect is just what we refer to as above the line activity. But I can tell you, I have clients, many of which who do their activities, and they do it very well. They do it for a livelihood, and some of them are going bankrupt. Not because it's a bad market, not because they're doing a bad job, but because they don't know how to run a business. So let's have that mindset. The other thing I want to just touch on too, so we avoid the same thing we end up with ASEA. Does it help for this? Does it help for that? Does it help for that? And we know that there's a general answer. It makes no difference what our illness is. When we're talking about redox and cellular communication, that is a broad enough description that people, if they understood what redox is, then they don't have to say, will it help for this? Because this contains a cell. And so a little bit about the business side of it too. First off, there's a thing called a publication called 535. And if you're in business, it is up to you to learn about what it takes to run my business. And simply, publication 535 is business expenses. It talks about, chapter covers rules and deducting business. Business expenses are the costs of carrying on a trade or business, and they are usually deductible if the business is operated to make a profit. So there's a differentiation, which we're not going to go down the road on tonight, on hobby rules, but there's also Well, the next phrase I think is actually pretty apropos. To be deductible, a business expense must be ordinary and necessary. An ordinary expense is one that is common and accepted in your industry. A necessary expense is one that is helpful and appropriate for your trade of business. An expense does not have to be indispensable to be necessary. So if we understand just the broad stroke, what does it cost me to do in business? What activities do I have to do? And what are those related costs? Those are business expenses.
Now, let me just ask you this, because I think that Bo told me, depending on under which administration we're working, I thought that under the Trump administration, that entertainment write-offs. So if you're taking a client to lunch, or if you're paying for their convention ticket, or if you're paying for their entrance into an event, or their, whatever you're doing, you're wining and dining your prospect. What I understood was under the Trump administration, you could not write all of that entertainment off anymore. Is that true?
For many, many years, and even till today, you can only write off 50% of your meals and entertainment. Today is unique, today being 2022. And since we're now looking at our tax returns for 22, that is apropos, even though we're in 23. And that is, if the entertainment is in a restaurant, it's actually 100% write-off. That was a new twist for last year. Those things are separate and distinct from what you just said. If I'm buying a ticket for an associate, all right, that to me doesn't fall under meals and entertainment. All right, that's more of promotion. That's more of how do you want to put it? There's a general topic called seminars and conferences. And those things that you're doing to help move your business. So for instance, as I said, things that are unique to your industry, all right? If you're in a retail business in Walmart, no one's going to come in and buy you a roll of toilet paper and give it to you. It's just not done that way. But for us, because the events are so important, and they are really key to the company's activities, then buying tickets to help someone get there would be a business expense.
Okay. So now COVID threw a loop in everybody's business. Mm-hmm. I know that there's something that's happening under the Biden administration that's about an employee retention credit. And so right. From what I understand, that the government is trying to keep the country from going into a recession. And so they're trying to put money back into business owners' pockets to mm-hmm. keep the economy healthy. So if because a lot of times people are running ASEA as a side gig, not necessarily as their main gig. It might be their plan B, not necessarily their plan A. So, so I know that let's just say I'm doing ASEA as a side gig, and when I work ASEA, I'm working it out of my house. I can write off a certain portion of my house, can't I?
Mm-hmm. Right. So those rules come down to an area and actually a room, but there's a little latitude in an area, but a room essentially that's used exclusively to do business. So many folks are working off the dining room table and their dining room / kitchen table. And the government's going to take the perspective that room, that table is not used exclusively. So what we have to look at is reasonably within our home, whether we own it or rent it. We can talk about both of those. Is there a room that logically would be a location where you would use exclusively? And there you talk about, there's two approaches. You take it on the square footage. So assume you've got a 3,000 square foot house, you have a 300 square foot office, you now have 10% of your house as a business use. Real estate taxes and mortgage interest are typically deductible items by individuals on their personal tax returns. However, with the increase in standard deduction, more and more people are not getting the tax benefits of those. So if you've got those items, you've got those taxes, you've got the interest, mortgage interest, and assume they're $20,000, for the year. Well, if 10% of my house is business, 10% of my 20,000 of mortgage interest and taxes, which now is not deductible because of my standard deduction, I can take that $2,000 and deduct it on my business. That's your home-based business. In addition to that, because you're running your business out of your home, there are other things that would never be deductible. So you have homeowners insurance, you have utilities. You're going to have obviously some internet, whether it's unique to your office or your house, and if it is, you would allocate some use to your business. Gardening and landscaping, as odd as that may sound, but if this is your office and this is your place of business, and this is where prospects and or associates are coming, then you would logically think that your maintenance of your outside the house. So all those things fall in that we would never have had before. But the big kicker, if I just really twist that one, we keep thinking income tax, and we'll talk about this a little bit later. But when we're self-employed, we're subject to Social Security tax also, self-employment tax. As an employee, we're used to seeing 7.65% go out of our pay stub. What we don't know, again, this is about the business owner. That business owner is matching 7.65%. So the government's getting its 15.3% from a business owner. When you're self-employed, you are both. So the profit of your self-employment business is subject to a 15% Social Security tax. So if we can take real estate taxes and mortgage interest and home insurance and these other items and build those up, all of a sudden, not only do they save you maybe in a 12 or 15% income tax bracket, but they're saving 15% Social Security. So next thing you know, those home office dollars are worth anywhere from 30 to 45%.
Right. Now I tell people when they, they're signing on as an associate, and I say, okay, I need your Social Security number. And they say, well, why do you need that? That because you're actually opening a business, and the only thing that you have to claim at the end of the year is income tax. You don't have to claim sales tax or any of that. The sales tax is taken out of every order, but you do have to claim income tax at the end of the year. So you'll get a 1099 form from ASEA. It'll tell you how much money you've earned. And if you earn more than $600 in that year, then you have to claim that on your income tax. Isn't that right?
Technically, any dollar you earn, you have to claim. ASEA does not have to send a 1099 out unless you earn the 600 or more.
Okay.
Yeah.
Okay. Yeah. So, so let's just say I don't have a home-based business. What can't I write off that I can write off if I do have a home-based business?
Well, again, the home-related expenses are the biggest bang for your buck on that respect. The other really unique aspect of working from home compared to maybe an outside salesman who goes to his office first and then goes into the field is that when you're working or you have a job, from home to your office is commuting miles. And those are personal miles. There's no tax benefit any which way or that. When you're working from home and you're going to do some activity outside your home, as soon as you pull out of your driveway, you now have business miles. Everything we do, assuming we have a car, is going to be burning gas or electrons. And we get to deduct certain percentages, certain cents per mile that going to work in an office, you do not get to deduct. So for instance, in 22, the first half of the year, we were looking at 58.5 cents per mile because gas started going out of whack and went up to 62.5 cents per mile. And then this year, actually, we're at 65.5%. In the days before COVID, Carol and I were very active. We would frequently go to New York and New Jersey. We would frequently go to North Carolina to see our people on the coast. We would go to Florida at least once a year. We would do probably somewhere between 15 to 20,000 miles. So for simple math, if we did 20,000 miles, that would be about a $13,000 deduction. And we also know that we didn't spend $13,000 to run our car for those 20,000 miles. So having business miles is a really, really unique benefit that employees and office folks don't have.
Right. So, I mean, I'm going to go buy a suit, or I'm going to buy a sweater and a pair of pants. Can I write those clothes off because I have to wear something when I continue my business?
No. Things that those clothes, those things that we can wear on a normal basis, the IRS looks at as personal. So David Silverman very frequently his nice sports jacket, and he's got beautifully trimmed blue jeans, right? And he said, I'm going to buy a new pair of blue jeans because I'm going to the convention. I want to look sharp. The government looks at him and says, no, that's something personal. All right. Now, if we're buying a sea of t-shirts or windbreakers or hats and those things, I mean, those are marketing tools.
So that's
Right.
deductible, right?
That's different. That's a marketing, to me, that would be a marketing expense.
Okay.
If I can pick any coat off my rack if I want to be warm. But if I want to be a walking billboard, then that's a marketing expense.
Okay. So the plane ticket that I buy to fly to convention, the hotel room that I buy to stay at convention, the
Mhm.
ticket that I buy to go to convention, the meals that I eat
Mhm.
because I'm attending convention, all of that is written off. Yes.
Right, exactly. All expenses incurred necessary to do your profession.
Okay.
Very, very broad. Now, there's a unique one, that I look at, often get questioned is can we write off any of our ASEA products? Because the truth of the matter is, much of what we get is for personal consumption. Ourselves. I heard a great story about a cat earlier this evening, so you would think the answer is no, but there's also another aspect that if there's an ordinary necessary business expense that you have to incur to do your business, then the answer to me is yes. Therefore, as an associate through D700, you are required 100 PV auto ship subscription in order to earn your commissions. You get to executive ranks, bronze and above, you're required to have 2 cases. And I know people, and Cindy, you've been in the industry as long, if not longer, there are professional network marketers who buy their products and never use it. They're buying it because they're marketing the product. So I take a line on my tax return that I feel very comfortable with. I've never asked an agent, but I put down a line that says purchases required to earn commissions. That's my first deduction.
Okay.
That's my 1 or 200 PV. But then beyond that, we start looking at, again, what we talked about earlier is marketing and advertising, samples. It's a very hard thing to do, to differentiate when is it personal, when is it business. I have a painting in the other room that my mother's former boss had done. It hangs on the New York Stock Exchange, and it's of a bull and the bear, and they're fighting. And they say there's room for bulls and bears. You can be conservative, you can be aggressive, but there's no room for pigs because pigs get slaughtered. So if we're ordering $2,000 a month personal consumption, yeah, I think you're overstepping the bounds there. But somewhere between my 200 PV and that other number, there's a lot of product that we use for doing gel tests on people, giving away samples. We keep extra product around so we can have that product. So when someone signs up, if they're signing up for the entrepreneurial pack, I don't want to wait 5 days. We hand out all that product to them, and then we get the product back.
Right. So what about blue blockers? What about a stand-up desk? What about special shoes? I don't know. Are those all write-offs, or those are office supplies?
Special shoes I've never been asked about. So I have to give a little thought about that one. If you have special shoes, is it because of a health reason? On the other hand, if you're a butcher, if you're an independent butcher, cutting meat in a cold facility, and you're wearing the type of boots that you would not wear going out to dinner, then you would say those are unique to that job. The blockers, I mean, those are things that, it's not there to see like eyeglasses. It is there to be able to see the screens clearer, cut down on the frequencies and the color. So I would absolutely take those as office expense, office supplies. Those little rising desks nowadays, absolutely. Those are all things that you do and one does in order to be able to do your job. If you've got some physical issues, then those things that allow you to work would fall in that unique area, for yourself. So it's not everybody can take those special shoes, but maybe that individual has the facts and circumstances, and we can talk to, as they always say, talk to your tax advisor.
So what about internet? I have to,
Internet.
in order for me to conduct business from my home, I have to have internet service.
There's no doubt about it. So internet, absolutely. The question then becomes, is that internet service exclusive or is it personal? What about your cell phone? All right. All those things fall into that gray area as to how much of it you do. If you are working, if you're active in this endeavor, and I'm avoiding the word business, because as you know, so many people in network marketing really are not in business. They're active in it, but they're really not focused on it on a full or part-time regular basis. You look at how much you're using. So if I'm working this business 3 hours a week, I got 6 kids at home and they're watching TV, they're on the games, playing games and so forth. You have to sit back individually and say, well, my internet usage, how much can I reasonably say would be for my business activity? Now, you and Bo, you're working this thing probably, with people all around the world, 15 hours a day. You may not even have time to sit and watch TV. I know you guys read a lot. So your internet may well be truly exclusive. All right. So it's the facts and circumstances, but the internet itself is a business expense.
Okay, fantastic. So let's switch gears a little bit. So let's just say I sign on as an associate. When would it make sense for me to make it an LLC and sign up under a tax ID number as opposed to my social security number?
Right. Okay. So, and then I think we can extrapolate that to the couple more levels after that LLC. One is to first understand what the LLC is. And everybody throws that around, but a lot of people actually don't know what the words are, and it's limited liability company. And when we first start as an associate and we're starting off as Cindy Buck, and that's Cindy Buck, it is you, a sole proprietor in your business. We are in an industry or in a particular product line that our liability exposure is very, very, very thin. All right. I know of no lawsuits in this entire company because of the product. So the idea of a limited liability is an umbrella around that Cindy Buck that says, if somebody wants to sue me, I want to have a little bit of protection. And what that umbrella does for you, it separates your business assets from all your personal assets. So if there was a litigation, then they can only go after your business assets. But I think more importantly, because Cindy Buck or Cindy Buck LLC or Wellness Institute, they're taxed identical. There is no difference. Sorry about that. And so there's no difference between the two. I think it's more of a marketing perspective. All right. The federal ID number is great to have because let someone steal my federal ID number. That's okay. I just don't want them to steal my social security number. So it makes a lot of sense to get a federal ID number. The LLC simply says to me, I'm doing my business. I'm a business person. And people look at it as a business structure. So if you're serious from day one, I would do it. If you're testing the waters, I wouldn't rush.
Okay. So let's just say that I start an LLC because I'm doing this full time and my goal is to replace my husband's income. And as soon as I do that, then my job, my goal is to have him quit his job and we'll be doing this full time. That's what Bo's in my scenario
Right.
was, right? So can I have the business, the LLC buy the company car so that we can get around to the events and things like that? Are there tax advantages to the business buying the car as opposed to me personally buying the car?
The answer is yes. And something I learned from a tax manager many years ago. The answer to virtually every tax question is the same. It's maybe.
Yeah,
Right? Because maybe the business miles yields a better tax deduction. Taking that 63 cents a mile. So it depends on whether or not that avenue for that tax deduction for auto or your business. So the answer is yes, is very viable to have the business purchase the car, pay for it, deduct the interest expense, which would not be deductible if it was just a personal car.
Okay. So let's take it a step further. When should I become an S Corp? What is an S Corp and
Okay.
when does it make sense to become an S Corp?
Okay, I'll speak quickly because I want to keep you to your 5 more minutes. So a corporation unto itself is what we have to understand that is. So we know that a sole proprietor and an LLC for a single individual are the same thing. A LLC that has more than one owner is a partnership. We then go into this area called a corporation, and a corporation unto itself is a completely legal, separate, distinct entity. An S corporation or a C corporation, those are the two different types. A C corporation is a traditional corporation that pays its own income taxes and it really files for its own returns and has its own life. An S corporation is a blend between that LLC entity and the C corporation, where you have all the benefits of a corporation, protection, which tends to be a little bit more litigated than an LLC, but the bottom of it is opened up and the income flows to your personal tax return. Where the benefit of that is that, again, the LLC, if you make $100,000 profit, it's subject to your 15% Social Security tax. If you made $100,000 profit in an S corporation, that $100,000 is not subject to 15%. It's considered a dividend, ostensibly. So $15,000 difference between the two. The only thing now on the S corporation, the IRS says, if you're taking money out of the company, then you need to have some reasonable payroll. You need to be on the books as an employee because it is a corporation. And then you sit there with, your tax consultant and figure out what is reasonable. And if you say, well, let's just split 50-50, and I'm taking 50,000 salary and I have 50,000 profit, well, that decision alone just saves $7,500. So that becomes very, very viable. So when you and Bo started getting this animal rolling, or maybe at the time that Bo was able to quit, at that point you said, we're really rocking and rolling. We need to make this corporation where you need to do a separate structure. Very, very quickly, there's a unique situation where a C corporation is actually better than all the others. Very, very unique. And that is if there's a lot of health issues, serious health issues in the family. And I had that many years ago, and they were spending $50,000 a year on their daughter. And by being a C corporation, you could put a plan in place that says, we will cover all the medical, all the health insurance, and all out-of-pocket medical expenses. So uniquely, a C corporation could be beneficial.
Okay. So what about hiring my children as employees to do work around the house? Let's just say somebody's got to clean the office and I'm going to pay my daughter $15 an hour to clean the office. Can I claim it takes her 2 hours to clean the office. Can I claim that $30 on my income taxes?
You would issue a W-2 to her. Yeah, okay. Absolutely. Absolutely. Ordinary and necessary. Someone comes to my office now, they're going to say necessarily, I need to get a cleaner in here quickly. So whether it is my kids who generally are, and that's why, because I have 2 local and they do the cleaning and I do pay them. I pay them commercial rates.
Okay.
Absolutely.
Okay, fantastic. Paul, is there anything else? I know we're coming down to the bottom of the half hour. Is there anything else that comes to mind where you're like, you know what one other thing that's really important to note as you're preparing your taxes this year is there anything that comes to mind?
If we're preparing our SIA business taxes that are not corporations, then it's just a matter of really scrutinizing and being sure that everything is being accounted for. Let me make a quick aside. When you leave your house and you have to go mail something, that's a business trip. If I leave my house and I go to the supermarket, that's a personal trip. So if I leave my house and go to the supermarket first, and then I swing around to the post office and come home, that's probably going to be identified as a personal mileage. If I go to the post office, which is my initial motive to leave my house, is to go to the post office, that's business. And on the way home, I stop at the supermarket. Now I've got a business trip out of it. So it's a matter of looking at everything I do on a day-to-day basis. And as you said about the glasses, what I do and how I incur and how I act, if that is moving my business forward, then there's a high probability that cost to that will be a business expense.
Right. Gotcha. Well, Paul, thank you so much. You know,
Yeah.
taxes are just not the funnest thing in the world. And I know that you'd rather be doing a SIA full-time than taxes.
Well,
full-time.
that's true.
But we sure appreciate 46. Did you say 46 years of
I
experience?
tell you.
Unreal.
Yeah.
Unreal.
Seriously.
Yeah, well, we don't do our own taxes. We have a professional CPA like yourself who handles it
Right.
for us. That way we don't make mistakes and
Yep.
don't get the headaches that, that are caused sometimes by trying to figure it out. And we go through piles and piles of receipts and then put them in categories and
Right.
then, give them to our CPA, and then he works his magic, and hopefully
Yeah.
we have as many possible deductions as we can possibly have.
And it is important to, once you have identified yourself as in business, not just a hobbyist, it really is important to get some professional advice. All too many times I look at people's tax returns and they're using bookkeepers even, and that I wouldn't say it's professional advice. And I'm just, this whole area is missing. Home office deduction missing. Doesn't need to be a network marketer, other than the fact that I would say that if the accountant or CPA you have has a thing against network marketing, it's probably not the right professional for you.
Yeah.
You want someone who at least believes that it's a viable business.
Yeah, not some pyramid Ponzi scheme, right?
Yeah, we can talk about that in another one about the audits I've had with network marketers and so forth. They've been fun and successful.
Yeah, I bet.
Yeah.
Well, Paul, thank you so much. Really appreciate your
Thank you.
professional advice, and we'll make sure we get our taxes done before April 15th.
Good idea. Sooner the better, and then you enjoy the summer.
Right.
Thanks,
Perfect.
Cindy.
Thanks so much, Paul.
Okay.
Good night, everybody.
Bye-bye.